Good morning, good afternoon, good night, depends on where you are.
Yeah.
This is our session about impact investment and how to convey your impact. So we all know that impact investment has been a buzzword recently for so many recent years, but it can be very hard for startups to know how to sell their mission or how does the startup convey their impact in their business. We don't really want to really fall into the trap of we're going to change the world, how we're going to show it both financially and social responsibility. So I'm very glad and honored to have all of our panelists today, and we're going to discuss into more of the detail. And I'm very happy to be here. We will all give a quick introduction of a top line of what's your background and what's your role in the current firm, and then we're going to get into the detail. So from myself, I was a former investment analyst at Phoenix Venture Partner in New York City, back in food and beverage and retail, and currently an MBA student at Cornell University. And I'm really happy to be here today and discuss impact investment. So we'll start from by the order of my screen. Amit, do you want to give a quick introduction?
Sure. Great. So my name is Amit Grover. I am the managing partner for Grover & Company Impact Ventures, impact investing venture capital fund that is taking a strong position in the food and beverage industry with plant-based and cell-based and cellular agriculture. My career is really divided into three broad phases. My first phase was for about 10 years working for some of the largest CPG companies in the world, starting with ITC Limited, Lavazza Coffee, and Pernod Ricard, which was very South Asia focused. My second phase, which was probably the longest phase, saw me building a management consulting company from New Zealand that expanded into Australia, Dubai, and London for about 13 years, where I've worked with about 400 companies and 1,200 entrepreneurs. And I bring a lot of learning from my first phase, which is my CPG experience, my second phase, which is 13 years of management consulting, and finally I'm trying to kind of, I won't say change the world, but do my bit in terms of impact investing.
Cool, that's very cool. Thank you.
Right.
Mark?
I'm Mark from Business Buddies. So I'm in the entire startup scene for around plus 20 years. And I studied economics and with a focus on sustainability. And then I went in 2000 in the venture capital space because I thought sustainability will be the next big thing. And now maybe we are in the third, fourth wave of impact, sustainability, climate tech, however you name it. So that's what I'm still doing. So with Business Buddies, I'm supporting and focusing on sustainable companies, mainly B2B companies, and helps them in building the company, supports them in developing the strategy, and in particular getting the funding on board. And by doing that, I also invest in myself. And I worked for a couple of years for the Climate Kick Accelerator. So I don't know if you're aware, but it's a European initiative from the EIT with 20 plus hubs and I don't know, hundreds of sustainable companies they supported in the last 10 years. And I was a coach for mainly for the Berlin-based companies of that accelerator. So yeah, happy to be here.
Thank you. Thorgay, do you want to give a quick introduction?
Sure. Thank you very much for being here. So Thorgay Reinertsen. So I'm really from the beginning a software entrepreneur. I've been developing companies for many, many years, more years than I'd like to admit, probably. Two of those ended up in Silicon Valley, typical enterprise software. I had the opportunity many, many years ago to come to visit Africa and Nigeria. And I just fell in love with the continent, and I felt like at some point I'd like to come back here and do something good, not just for money, for profit, but actually, and it took me quite a long time. And eventually, I started something in South Africa, which was a training program for entrepreneurs in townships, and really just try to get people to build businesses. Once you have an online connection, see just see what kind of impact you can make on that. And I loved it. I thought it was great. And that got me onto looking for other investments, opportunity in impact, really. And today I was an advisor, helping companies to raise capital, and I invest myself as well. I've been involved with quite a few impact investments, mainly around education, but also around mobility. Yeah, I think it's just a lot of fun doing impact investment. That's why I love to be on this panel as well and hear everybody else's views as well on the topic.
That's very cool. Thank you so much, Sergey. Christy, do you want to give a quick introduction?
No, thank you. No. Sure. So basically, I'm Christy. I'm Christy Theis. I'm running the early stage investments here at BBVA, and I am also, well, for example, we have a great partnership with the Artemis Fund in London, where we have a venture studio and invest in sustainability-driven models, principally. Before that, I was an entrepreneur myself. I founded and invested in a couple of companies in the US and here in Europe. And before that, I did something very different. I was heading investment banking businesses in sales and trading, and in the capital market side. So I think I've seen, the investment side from pretty much all angles, from corporate investment to VC to myself, entrepreneur. And the sustainability part was always a very, very big driver for me. And this is one of the main drivers we're using right now here in the BBVA. We're going to speak a bit more about, I suppose, in the next couple of minutes.
That's great. Thank you so much. So I will start asking some questions for all of the panelists. So for the audience, if you have any specific question, also feel free to pop in the chat that we probably could cover after the panel session. So for the first question I'm going to ask, partially probably already covered, is that what is the primary driver for you to interesting in impact investment? And how do you see it fit into the large portfolio of the traditional investment and the charitable activities?
So, anybody can jump in, or are we going turns? Or?
Anybody could jump in.
Right. So
okay. So just jump in quickly, and then sorry.
Sure. Go ahead.
Go for it.
Christy.
You do as well. Go for it.
Okay. Cool. So look, for our venture capital fund, it's really the two broad areas that we look at, which is environment, which is climate change. So obviously, we are trying to get investing into businesses that take a lot of livestock off the food chain. So essentially, plant-based alternative proteins and dairy. And obviously, livestock means carbon emissions, methane gas, and greenhouse emissions, all that. I don't want to kind of go into detail on that. The second largest area, which is very dear to my heart, and is animal cruelty. We all know how livestock is bred, whether it's beef, it's chicken, or it's pork. So taking off the food value chain is of prime importance. Now, you asked the question that in terms of how does it kind of impact the traditional investments. Now, we have a very different take on that. Traditionally, if you look at investments, maximizing shareholders' wealth was taught to us in MBA books that would kind of fall off from our ears, traditionally in the model. Well, in terms of plant-based, if you really follow the last 3 months or so, or 6 months, companies have been posting 140, 150% growth year on year, whether it's the pandemic or the shifts in, kind of healthy lifestyle. So that's definitely a great news for the traditional investor, that you're really, looking at 30 to 40% IRR. If you take it a year on year, or if you take a 5-year kind of average IRR. So traditionally, it's outperforming every portfolio. So traditional investors should be more than happy with investing. As far as the charity aspect, which you asked me, how does that fit in? I think it's easier to sustain a cause or an ESG or an initiative which is funded by profit, because it's an ongoing activity rather than charity going and asking everybody for money. So I think the longevity of an impact or a cause at least to me, is better funded if your company is an enterprise that's generating value and consistent value on a long term. So I think from that perspective, we outrun any charity because it's a profit-making kind of body that is driving a cause. So that's our take on it.
Cool.
But that's exactly, I think that's exactly pretty much what I'm thinking as well, Amit. The profit side is really, really important. It just drives the whole machine afterwards. So you have to, you should seek to have a profitable business, not just an NGO. So I mean, from my side at least, this fits extremely well together. We have also a strategy play, of course, as the bank.
Sure.
It's one of the two main things that it's actually part of our primary and secondary strategic official goals, as we want to help people either, well, on the financial health and well-being part, but and secondly, we want to bring sustainable solutions in environmental and social areas.
Right.
It's actually our primary goals. It's very strange for a bank, I think, to have kind of, talk, but this is our two main primary goals are those. Just to give you maybe, it's a bit strange maybe to say this, but if you're looking at traditional investment portfolio, right, startups which don't really have anything with sustainability, data and not only conviction, but data is also showing us that everything which has a sustainable business model goes towards sustainability, either a social part or environmental part, it seems somehow to outperform traditional investments.
Yes.
I don't know if it has anything to do right now with the trend that we are seeing everywhere in the last couple of years in the world, but it just if you take away the conviction that we all have basically to do some good out there, like Torgeir was saying before you, Amit, it's not only that. It seems to be that there's a real monetary gain actually as well doing it. So I think I really believe that most VCs will go also this direction. Many are already looking at sustainable business models as such. But I think there's going to be in each fund they will have to make some space basically for our kind of investment, more impact, social impact, etc. investment.
Right.
Yeah.
Maybe I can add on this. So I fully agree with you, and actually I don't like it when the people are talking about impact, because any company which gets founded should have a positive impact. Of course, not every company impact, but at least should. So, and I see it rather from a business opportunity point of view. What we need in the future are, of course, companies, technology solutions who help to decarbonize and dematerialize our entire economy. So, and they have to address the largest markets in the world we have, so like mobility, logistics, prop tech, and so on. So, and the digitization actually gives us the kind of tools or the technology so to develop solutions how we can deal with that. So I think it's more a super rich, huge business opportunity with a positive impact. So when I make jokes, I always say, you know, guys, I want to get rich and famous by doing good. I want to get rich and famous with purpose. So because whenever a company with a positive impact is economically highly successfully, then of course the impact is also growing with a company. So and therefore I don't see it as a kind of contradiction. Of course there are kind of businesses which have a high impact and might be not, the most attractive companies from an economic point of view, but you can have a lot of companies which are both.
Sure.
Cool.
So if I should add to this, I could just say I agree. That's the easy way.
Come on.
No, but
nobody disagrees here. That's terrible.
Yeah, exactly. Let me disagree. No, but I personally try to raise capital for kind of charitable businesses, if you like, and that was bloody hard. So I know how that is. I also raised capital for companies who are doing a lot of great impact, but put profit first, and then through the profit, you can actually make some impact. Now, I think in a way, it's just historically that we always thought about charity in one corner, and then we have this for-profit ugly thing in the other corner, sort of thing. And they're like, east is east and west is west, and never shall the two meet, sort of thing. But it's not like that anymore. I actually think my prediction is this, that every business in the future will be, a degree of impact. It's just the degree of it,
I agree.
Because if you think about it, if you start a business and if you can employ people, that means that, people basically will make money, they'll pay tax goes into the welfare system can now pay for roads and hospitals and schools. So anything is impact. It's just the degree of it, and then you can of course say, well, what's not impact, or positive impact? Well, maybe, gambling or, selling, loans with high interest rates and putting people into debt. I mean, that's obviously, not kind of ugly. But in a way, so in that sense, maybe impact is just like, when people said in the back 15 years ago, is your company a mobile company? Today you don't even ask that question. Of course, we have mobility.
Yes.
In the future, people are not going to ask the question: are you an impact investment? No. You know what? Of course. It's a given. So that's my prediction. I don't think it's and the fact is that the more impact you make, the more money you will make, because you'll have a fan club now. You'll have a fan club in your employees, your customers, the politicians will like you, everybody will love you.
Cool. Definitely agree.
Cool.
I think this is going to be the trend for sure. So my next question would be getting a little bit more detail of how to convey that and what are you looking for. So the question is, what are the financial or the social or the environment objectives you have for your fund or for your business currently they're holding? That's how to measure that. What are you looking for from those startups?
Who wants to go first?
You go, Amit.
All right, great.
You won.
All right, thank you so much. So look, I mean, from our perspective, we really look at social and the financial governance part of it. Now, when you talk about big aspects like climate change and animal cruelty, I mean, there are tools to measure it, but even the biggest companies in the world, like, the PepsiCos of the world, they're, of course, responsible for kind of doing the damage that we're all trying to repair. But even the biggest companies don't have the precise tools to measure it. Still in a lot of gray areas, the precise measurement of impact. But how we do it is we take a very different stand on social drivers that drives our impact investment. So one is ethical sourcing. Because we work with food companies, it's very important for us to understand where the base products are coming from, the farm to table approach, the kind of ethical standards you're following in farming, and all the supply chain that is bringing the product to you. The second big area, which is not to do with the ingredients, but more in terms of equal employment opportunity. Now, I don't know about a lot of impact funds, but we are trying our level best to focus on women and gender equality. I mean, we are trying to build business models that are very, very women-centric in some of the emerging economies that are absolutely pivotal to their growth and transformation on the social side of it. On the financial government side of it, I mean, I'm sure most VC funds are kind of have the sustainability accounting standards. They talk about the global reporting initiatives. And these are some of the tools that map your ESG and your impact to a certain degree. But again, I repeat myself, there is no precise mechanism even the largest companies in the world have right now. But everybody's trying to do a bit by evaluating or assuming using these standards the best way to kind of measure your impact. So these are the two in terms of social and governance aspect that at least my fund is kind of driving. The ethical sourcing part of it, that is not only the farmers, but also the logistics. Like we are a big advocate of go local. Now, gone are the days when globalization happened and you could go to cheaper economies and produce and ship all over the world. I mean, the amount of carbon emissions you're kind of producing by doing that is insane. And, a lot of people talk about carbon offsetting, that we're going to plant trees. But how many trees have been really planting? I mean, if you look at the global shipping industry, I mean, we should have 40% of our planet as forests. if that was true. That's obviously not happening. So the reality is that when you talk about ethical sourcing, not only you talk about elements of fair trade, but you look at the whole logistics, the manufacturing, the green processes, the ISO standards, the lead kind of, on every level, whether it's sourcing, manufacturing, supply chain, end consumer, the entire chain of how the consumption happens. We map sustainability as much as we can on each level of that chain, starting from the sourcing right to the end of the consumer. On a company level, on a financial level, then obviously we use these tools to kind of measure that impact, relate to our investors, and put it out there in the public.
So you use, sorry if I just asking you, Amit,
Sure,
so you use something like an expected return, or is it like a social ROI, or how do you do that?
It's a social ROI. You're correct, Christy. It's more like a social ROI. I mean, I could put an expected return, but I can tell you that's just my assumption more than any, accurate metrics. And the biggest problem, Christy, is I deal with early stage companies. These companies are new companies that barely have 5 or 6 people. So if I'm trying to tell them to apply all these metrics, A, it's very costly. B, I mean, they'll be scratching their head against the wall trying to evaluate that. These metrics are really cool for very large structured companies that have impact divisions and the right resources to kind of do that. But we are talking about early stage 4 or 5 people company. So we are trying to kind of simplify the process and, as simple as saying that, okay, if you sell 100 kgs of plant-based meat, what does it really mean in terms of taking the animal protein off the food system? How many animals do you save? Even if it's like saying 10 cows. So those are very simple mechanistic ways of measuring it. And as you scale up, obviously that number starts increasing.
Sure. No, but this is exactly the issue that I always encountered when trying to measure kind of things. There are too many inputs. You cannot put it on, especially on early stage ventures. It's impossible to put them on.
No, it's impossible.
It's just impossible. I mean, they have to do their business model. It's more the conviction of the founders that is really the point. So you can just basically give on your values, which we all do, I suppose. But in the end, it's very tough. What we are doing is we developed actually an internal model which we call health metrics, which is on one side the metrics that the KPIs and values that you give on to the startup you're investing in, so they know if they're on the right track. If you very open, transparent kind of discussion, right? And at the same time, we use a bit of the mission alignment type of thing. So look, we think we are here. You should be doing this and this and this and this. This is at least my advice. And they are doing it. And then the end, we look how it how it falls back. This, I think, in the early stage, it's pretty much the only thing that you can do, because anything else will be too complex, and you just would get rid of the actual social part of the impact. So we don't want that.
What we do, Christy, that's really interesting. What we do is we build an umbrella. Now, those umbrellas have, let's say, 10 performance indicators according to, either your sustainable accounting standards or global reporting initiatives. And we basically, our analysts work with each of these ventures and keep inputting as the information comes in. So if you're dealing with 50 or 60 or 70 ventures consolidated, when you look at that umbrella of the impact that you're trying to make in, let's say, 4 broad areas, that's how we measure it. We actually do it ourselves rather than putting it on the venture.
Okay, no, I understand what you're saying. Exactly.
Yeah.
If I just make some thoughts on this as well, is that, I mean,
sure, please.
We have an impact investor here in Sweden called Norrsken, started by Niklas Adelbert, one of the co-founders of Klarna. And they have very, very strong demand on the people that they invest in, the companies they invest in, that actually they have to come up with a measurable impact kind of gauge. And of course, it's specific to what you're doing. If you're doing, CO2 reduction, or if you're creating a high level of education, or you're helping create jobs in a low income in a part of Africa, whatever. Of course, it's going to be very much like horses for courses. So there's not one thing catches all. So it kind of reminds me of the old balanced scorecard by Kaplan, 25 years old. where basically you start doing soft dollar. Hard dollar we know how to measure. Revenues, gross profit, that. We're talking about the soft dollar stuff. How do you turn that soft dollar benefits into kind of hard dollar? And I think this is, it's an opportunity. It's an opportunity for somebody probably to create a piece of software to do this. Create a piece of software that now you can put in your KPIs. It creates a dashboard.
Sure.
It's verticalized by whether it's health, education, CO2, or whatever impact you're doing.
Yeah.
But sometimes but sometimes it works quite well. So when you have a company or technology which clearly, I don't know, helps you to reduce your energy consumption, then it's easy to calculate that. And I have one of that company, so it's easy. You can say, okay, we save 20% of your energy consumption of a building, fine. But another company, so it's Plan Blue, they are bringing satellite technology underwater and help to map the oceans. So and there are two things. First, you can use the technology actually to help or to rescue the oceans, but also, of course, you can use the technology to kind of explore or to find oil or whatever. So to destroy the oceans even more, that's the one thing. And the other thing is they are help to measure certain things, but they don't reduce maybe CO2. So they just help you to see how much the oceans can capture CO2. And of course, the oceans are quite important to capture CO2. So it's not always as easy with these kind of frameworks. And sometimes with that company, we have sometimes issues with these kind of impact investors because they want that we clearly calculate how much CO2, for instance, we save, which is not possible.
Yeah, I mean, today you're seeing a lot of companies like NASDAQ and PwC, KPMG, all the top 4 accounting firms putting out these tools out there. I mean, if you just do a Google search on how to measure your ESG, I'm not kidding you. You've got hundreds and hundreds of tools and softwares that they all claim that, look, you determine your KPI, you input that, and, in a 3 or 4 member team company. I mean, if you try to implement that, I can tell you they'll be scratching their head and only doing that and not the work that we're investing in them for. So look, there's so many tools available, yet it is so confusing, to be very honest.
It's not only for you, for us confused. This is the point. Even for us, it's confusing. We are doing this every day. So it's like, just imagine everybody else. So this is why I don't know. I'm like trying to look at them. There are a couple of companies out there right now who is trying to put a simple, like, it's maybe simplistic, but at least it's in the right direction. Like kind of, a rating, so or dollar value for investments. I strongly believe that. I'm working at the bank, so I strongly believe that the flow of money will change ultimately things. So if you try to push it towards stuff that is environmentally and socially more responsible, then you probably will make a change. If you don't move the cash flow, it's going to be very different, very difficult at least to make a real change. So there are a couple of companies out there who are trying hard to put all the ESG ratings into a model which is easily applicable, and but we're still not there. I don't see anybody who's like standing out to say like let's put some money in Apple. How much? How many dollars of an Apple share means that this goes towards some sustainable target? What is the sustainable value of an investment? If you can put a value on that, you could actually move the whole investment side of everybody who is so socially responsible, environmentally responsible, to the companies who have a high dollar value for their stock, for their shares. So this is something that I really like looking into it. But at the same time, I'm looking also in the offsetting of carbon. But if you think about offsetting of carbon, it's just a small part of the picture. But everybody is focusing on this. Why? Because it's the only thing you can somehow measure. It's a somehow measure. So you can measure it, you can put a value on it, you can do something about it. So as long as we will not be able to measure better other parts like plastic, like whatever you can think of, it's going to be very difficult to come to a real change. So the only thing that I can do, that we can do, is basically try to channel money towards the right direction. Actually, we pledged, I don't know if you guys know, but we pledged 100 billion euros right now to 2025 for this kind of project. This is quite a remarkable sum, I think, and I think we deployed quite a big part of it until now. And I don't know. I just hope we're gonna find. The problem is not that. The problem, I think, is that we do not find enough stuff that you can really invest in. That makes it that you can say, like, this really gonna make a difference. It's really difficult. It's not an easy thing to do.
Definitely agree that it seems that for impact investment, what the hardest thing is that to find a metrics to compare apple to apple. It's even really hard to compare, like, if this is a good investment I'm making right now, but the next investment we're trying to make could be totally different measure of impact, which is hard to compare in comparable ways. So definitely thank you for all of you for the answer. And my next question would be, do you have a piece of advice for the startups who are trying to convey the impact in their product or service? And do you also have a piece of advice for the new impact fund manager, like how they could both work together to trying to achieve the investment profit or the impact?
Maybe I can go first on the startup thing, because I work with startups all day long, and I run my own startups as well. I think nothing has changed. Nothing is new under the sun. Of course, you have to focus on how your company will create a good return on investment, first of all. And you'll have to go through the usual stuff about, your metrics and, what you're going to use the money for, and et cetera, and then explain that you have a bigger purpose. There's a purpose that's going to drive this company forward, that's going to, get people to want to join you, your customers want to buy your product and so on. And that purpose is to do something which has a positive impact. And you describe, of course, what that is. But that's kind of the horse and the carriage. The horse is, of course, it's the carriage. The horse is profitable. Why? Because if it isn't profitable, if it isn't sustainable, you won't make impact. So, and as enthusiastic as you are, always remember that. Make sure that this thing actually has legs. It will work. The economists will work. And then it's very integrated, your purpose with that financial sort of, viability of your business. That's a key thing. I can't sort of, and of course, coming back later on then, okay, well, how do you measure that? You measure the hard ROI, very straightforward. And then you have to work hard on getting the social impact proof, that you have evidence as well, that you now are delivering it. The other question around the new impact fund manager, I think you have to be very clear about, what are you investing in? Be very clear about the intention. What is this? What are we actually trying to do? It comes back again to the fact that we're going to make we're going to make more money as an as an impact investment fund than we were not thinking about impact. But I think it's just the clarity of it, and come away from the old thinking of left corner, right corner, charity versus back to that sort of old chestnut.
Look, from our perspective, our fund, I mean, it's the easy part. Talking to startups is the easy part. You've got to have a clear mission, a clear goal. Don't give me vague answers that I want to change the world. I want to do 100 things. No, you can't. You're just a 3-people band. So kind of stick to that purpose that's very near and dear to your heart and drive it in a full, passionate manner. Of course, a couple of things are related. So if you're trying to offset carbon emissions, then you've got to be green, then you've got to talk about compostable packaging, no to plastic, and so many other things that are intertwined in your entire supply chain. But it's good to stick to one cause and have a clear kind of passion on driving that. I mean, too many causes means that you're losing direction. As far as the new fund manager is concerned, I think I'm probably the most relevant person to answer this because I'm a new fund manager. I'm doing this for the first time in my life. I've never run a fund before in my life. And my biggest challenge, I'm very clear about the impacts that I want to make and the areas that I want to do that. But are the LPs that you're working with on the same page? Now, anybody who's raised a fund knows that not every LP would think like you. I mean, LPs mean limited partners for those, of our audiences that don't know. The people that it's very easy to manage fund, but to raise that fund with a similar objective and people who see the investment with your prism, it's the toughest part. Look, I'm sitting in the Middle East, and that's huge in oil and real estate money. And look, I mean, I'm just a $50 million fund. People buy cars worth $50 million in this fund. I mean, I'm not kidding you. I mean, it's that crazy. And when you go and talk to them, they just don't understand that. What do you mean you're trying to do a change? What do you mean, like, you're going to sell, like, I'm going to stop having meat and I'll stop having vegetables, start having vegetables? What do you mean that you're making meat from vegetables? I mean, I don't understand. Like Arabs, like you try to get that whole point across to them and they just don't understand what you're trying to tell them. So, look, the reality is there is obviously expectations both on the LP's part and the fund manager's part. How you want to run the fund, how you want to make an impact versus how your investors see it. So very early on, and I've learned this through a very, very hard struggle, that sometimes you've got to say no to money because the people who are giving you money are not aligned with your purpose, vision, ambition, and mission. And they're going to give you problems down the line, and that's going to be bad for yourself, for the companies that you're investing in, and for the whole fund. So sometimes it's best to walk away from. So my advice to new impact fund managers is find the right people with the right heart and the right vision and the right mission, no matter how much time it takes you. It's easy to accept money quickly because you want to go to market quickly. You're enthusiastic about it. You're getting frustrated about it. But mate, I mean, you've got to look at a long-term view of what you're trying to do. And you don't have the right people for it, you'll not be able to make that difference. That's at least my take on it.
Good.
I'm not sure if the question was more around helping startups to deliver a great pitch, or was it more around the investment side? I didn't get it, Yemi. Because Amit, you said more about investment, of our LPs, etc. So
yeah. So somebody asked that what should the new impact fund managers advice for the new impact fund managers? So I was addressing it from the fund managers perspective.
Okay. I was thinking about the startups who are trying to pitch me. You've seen, we all seen thousands of pitch decks, and I think we all agreed at the beginning that it's more, at least in the short term, there's a mixture of two things. At least for me, is that it's financially sound. It makes a return. It's very important. If this doesn't happen, then the rest probably will not. And secondly, they have the right kind of values and understanding of what they're trying to do. So for me, it's I'm just looking from the startup side right now. It's pretty much the usual stuff. You need to have a clear pitch deck, well structured to the point. Use more facts than just visions and etc. And a clear go-to-market, which is mostly missing at most early-stage startups. And of course, the team has to be motivated, etc. But that's a given. If this is not happening, the rest will not happen either. So that's something maybe that most people don't really think of. Most of the startups and sustainability side that I'm seeing, at least the pitch decks, they have this big vision, but they never even go one step further to define how to reach this vision. They're just the first step type of thing. And I think this is something really lacking. The couple that are really like, hey, we're going to do this, and maybe if you're right there, we go there. This is usually the guys who get easy funding, easy in terms of that there are several co-investors who go in the same deal, etc. So that's not no. So this is something maybe startups should be thinking about who are going to the sustainability area. What is your wedge? How do you get into what is the entry point in your market and the vision coupled to it? If you have a wedge, you have a huge advantage against other startups in the same area.
True.
Cool. Mark, do you have anything to add for the suggestion?
No, thanks.
Cool. So this is probably going to be our last questions. So apparently the pandemic has already affected many people's life drastically. So what do you look do you look at the social impact investment differently since the pandemic? And for your fund, like how you see that's changed your strategy when you're evaluating investment?
Well, from my perspective, because I'm in the alternative proteins and alternative dairy bit, it's changed my strategy to be more aggressive. I mean, you've got the likes of Impossible and Beyond and Oatly going through the roof, absolutely. I mean, some of those valuations don't even make sense. I don't even know how they arrive at it. Honestly, I've seen like 5 different valuation models, and with all my training in finance, I can't put a hand on how those valuations are kind of going on. But anyway, I think it's more about market sentiment and market kind of psychology there. But look, it's a great time for plant-based. It's a great time for alternative proteins and alternative dairy. And I think this is going to continue for a while because people are making healthier choices. Obviously, the pandemic has played a huge role on people's mind that we need to get sustainable. We need to put clean food in ourselves, and anything to do with this sector is, I think, this is just my kind of vision that for the next 2 to 3 years is absolutely going to be a golden run for this sector.
I think that the pandemic has really created a super acceleration of education online. In some cases in a forced way, because people nations have kept schools closed. You were forced to do education over Zoom and stuff like that. But I think we have some fantastic educational platforms like Khan Academy, and of course also the other commercial ones, Coursera, Udemy, and so on. I think that spreading education across the world, education is the answer to every problem. Every single problem you can answer with the word education. Why? Because you think about environment, whatever, if people are not educated, they don't understand how to behave. Or people, when it comes to health, they don't understand how to be preventive, how to do preventive behavior so you don't end up in hospital and so on. And if anything, right now I see education be on the rise, and it's accessible to anybody in the world with an internet access. It's absolutely amazing, And today you can get the whole MIT curriculum online. It's amazing. Yep. So now people spend a lot more time on Netflix probably and looking at MIT, educational courses, but it's all there. And everybody's the biggest impact we can do in the world is to educate our children and also adults as well. So that for me is the biggest opportunity right now with the pandemic.
Yeah, fully agree with you. So it was, of course, definitely a big push for digitization, and to see all the opportunities the digitization opens to us. And that will for sure, I think, stay. And my hope is that we will see a new normal afterwards, and that might be a kind of digital sustainability. Because the talks, interestingly, I think the talks about climate change and sustainability are still there. Of course, we read so much more about Corona, obviously, but when you look real, it's still there. And I think afterwards, it will be a kind of new normal, will be sustainability, and most likely we will use the digital options to become more sustainable. And maybe when we work from home 2 days instead, so not driving 5 days to the office, but stay 2 or 3 days at home. It will be, of course, good for our environment, and it will be good for our quality of life as well, I guess, and for our cities, because it's less commuting. And I think we will see a lot of these things. And maybe Corona was good at the end for that. Huh?
Well, it certainly accelerates things in one way or the other, right? No, I think I agree as well with you guys. Unfortunately, we don't disagree in much today. That's not good. We should disagree in a couple of things, but well, that's life. But I see basically two different pictures. One is like Amit was saying, some valuations are going through the roof without any reason. I mean, it's just there because the right moment, right time. And if you think about it, a lot of capital has been held back the last couple of months due to the crisis. Nobody really wants to invest, and suddenly, like, woo, We have to deploy it. So this actually drives valuations up. But then I see clearly one big risk, it's growth. Everybody who grows for the startups now, and then obviously the valuation side, the growth of any kind of business model which has lots of social contact is diminished. So it's going to be a hard time for these guys to raise some money. There are many people who are raising now bridge rounds, which justifiably they need to do, to survive like the year. Because I think, like Mark was saying, we're going to get to a new normal. It's just what Jonas is typical, like, hey, we're going down, we invest some more right now, it's going to be cheap, and we go up again. But these people have to, startups, they have to survive this death valley. But I strongly believe we're going to get to a new kind of normal very soon. And I don't think that we going to learn too much from our mistakes in the past. We have every 7 to 10 years anyhow, any kind of crisis. This for me was like one of these black swan events, what Khaled was saying like 15 years ago. So I think we're going to have another black swan event in a couple of years. We're going to see. We're going to be all surprised about something else. It's just how you survive this time and how you put the money to work that, with the right founders, with the right business models that they can make a real impact. And I think this is really important. And I don't think this is a bad thing for sustainability. It sounds really bad to say this, but it's actually an opportunistic moment for sustainability as such. Yeah. If you look at this from the environmental side, if you look at it from the social impact side, it's actually a good moment where people will start investing even more in this area. So I don't think negatively for this. Of course, there's a lot of other negative results in other parts of society, unfortunately, but not on sustainability. Contrary, actually.
Great. Yeah, I definitely agree. Thank you so much. I think the time, we are running a little bit over the time, but there was one question in the chat that seems to be very interesting, so we can probably give a quick comment is, does any of you guys have a takeaway on the diversity in the impact investment, which I'm personally very interested in this topic also.
Can you repeat the question, because I didn't understand it really.
Do you have any takeaways or suggestions? What are your idea about the diversity in the impact social impact investment?
Diversity in which way? I mean, there's so
many
different ways. It's such a broad question. I don't even understand what to answer. Like, I'm sure it's from an audience. So can the audience be specific about what area of diversity are we looking at? About the diversity of ventures, diversity of causes, diversity of
I would assume it's diversity meaning, equal opportunity.
Right.
More people have access. More people can, everybody can be part. There's no digital divide. Yeah. We can all participate in the economy. We can all participate. And again, I come back to this digitalization. Of course, is the beauty of that. Of course, is that everybody can be heard. Everybody can be seen. Everybody can learn things. I mean, I think today, meritocracy is a great thing, of course, that people be seen and be valued for what they actually contribute and what they do. I think we've seen this in the places that I've been working in Silicon Valley. I've worked in London and so on, places where, it's like an all-star team, everybody participates. I think this is, of course, great. And I don't know, back to this whole impact thing and measurability. How do you measure all this stuff? Very, very difficult, but
right.
Definitely, I feel that we're having a situation of equal opportunity,
right.
gender or race or anything, participate in a digital world.
Cool.
Yeah, I mean, it's the point that I touched upon earlier, that we are, as a fund, are providing equal opportunity. We are investing on women-centric businesses. We are driving those value chains through. And we believe that that's going to be absolutely pivotal to sustainable change when you get the women in the forefront.
Cool. Thank you guys so much. I probably could add a little bit more since I'm actually currently interning for found that specifically through the gender lens, meaning we're only looking at the companies that have at least one founder who is woman. And I do see that there is a big improvement, because in my previous experience, I do see sometimes the women-led company, even though they have pretty stable growth of revenue and pretty least of the risk, they are underfunded. So through those kind of opportunities, I do see there is an increase in the future that there will get access to the equal opportunity in the investment world. So thank you guys so much for all of your great input and thoughts. And I think Andrew just jump in and say the networking has already started. So feel free to jump to the room for networking. And thank you for all of the audience also.
Just wanted to say
great moderation.
Yeah, just wanted to say a big thank you to Yimi for making this happen and moderating and chatting with all these folks.
You're welcome.
Did everybody go through what each of their funds does and how people can contact you? Did that already happen?
I did haven't asked for the contact information, or do you want to share up for that? But yes.
Did you all want to mention how people should reach out, whether they or your LinkedIn, or what's the best way to reach you in case there's companies who wanted to?
Sure.
For me, it's usually LinkedIn. Basically, it's the easiest thing somehow. It's out there. It's easy.
Yeah, the same for us. LinkedIn, easiest way and the fastest way.
We should buy some LinkedIn shares. I mean,
those are Microsoft shares, right? Yeah, I've heard of that company before.
Yeah.
Well, you all are amazing. So we'll be heading into the networking area now. For those who aren't, where it's not 1 or 2 a.m. like Ahmed, but of course you're welcome. But I appreciate you tuning in so late from Dubai. But I'll be grabbing a beer from the fridge and meeting everybody in networking. Networking is where there's one-on-one video chats, and for those who can still speak, whose voices aren't worn out, I'll meet you in there. And also we're meeting tomorrow as well. So tomorrow from 6 to 8:30, we're going to have 20 startups who are pitching live for investment and getting live feedback from VCs, in their area and in other areas. So for folks who want to come back tomorrow, we'll be doing it again tomorrow, but it'll be all pitches tomorrow.
Right.
Okay, cool.
Oh, pitches is fine.
Cheers. Thank you all so much for pitching in.
Thank you.
Yeah.
Cheers to you.
Bye-bye.
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 Bye.